Welcome to the Depth Dive. Today, we're tackling the really crucial updates affecting the Luxembourg securitization market. It's May 5th, 2025, and things are moving fast.
They really are. It's a confluence of EU changes and specific Luxembourg adjustments.
Exactly. We've gone through, well, quite a range of sources: legal updates, CSSF circulars, ESMA reports, consultations, plus Luxembourg tax and company law changes.
A lot to digest.
Our mission here is pretty straightforward. Cut through all that noise and give you the lawyers, finance pros, directors, compliance officers, COSECs, the essential intel you need right now.
We'll try and simplify the complex bits and really flag what's most important.
Yes, let's dive in. Starting at the EU level, the securitization regulation is getting a serious look, isn't it?
Yes, it definitely is. The European Supervisory Authorities, the ESAs, put out their big evaluation report back on March 31st. This is under Article 44 of the regulation.
Right, the required review. And what are the main recommendations coming out of that? What should people be focusing on?
Well, a key one is their push to clarify the scope of the regulation and potentially broaden the definition of what counts as a public securitization.
Broaden it. How so? What kind of deals might get caught that weren't before?
Well, they're suggesting things like deals with an approved prospectus or notes traded on EU venues or even widely marketed deals with non-negotiable terms. These should probably all be considered public.
Okay.
And if that happens, you could see instruments we currently think of as private, maybe CLOs, some synthetic securitizations suddenly being reclassified as public.
Wow, okay. That would be a massive shift for those structures, wouldn't it? Suddenly facing public disclosure rules and costs.
Absolutely. It changes the whole compliance picture, potentially making some structures less attractive if they're based here in Luxembourg, but get hit with those heavier requirements.
That's definitely one to watch. What about due diligence? I heard talk of proportionality.
Yes, they're suggesting making due diligence requirements more proportionate to the actual risks, a bit like the UK approach, perhaps, or substance over form. It could ease the burden a bit for international investors, maybe streamline things. Good for Luxembourg's competitiveness, potentially.
Less box ticking, more risk focus. Sounds sensible as long as investors are still protected. What else did the ESAs flag up?
Simplifying transparency and reporting. They mentioned using more flexible formats like CSV for data.
Okay.
But crucially, they also stress that supervisors still need enough info on private deals, maybe via reporting to a repository. So it's a balance.
Simplification, but still ensuring oversight. Makes sense.
They also mentioned targeted tweaks to the STS framework. Simple, transparent, standardized clarifying risk retention rules, pushing for more consistent supervision across the EU.
Consistency would be good.
And potentially some exemptions for intragroup deals, especially involving smaller banks.
So quite a package of recommendations heading to the Commission. And ESMA's been busy, too, on private disclosure templates.
Yes, spot on. Back in February, ESMA started consulting on draft templates just for private securitizations. They proposed a streamlined, uniform template, but only for what they call European private securitizations.
Okay, define European private securitization for us. That sounds like a key detail.
It is. Their definition is quite narrow, actually. It only covers private deals where all the main sell-side parties, originator, sponsor, original lender, the SPV itself, are based inside the EU.
So many international deals structured through Luxembourg, maybe with a US or UK originator.
Exactly. They probably wouldn't qualify for this simplified template. They'd likely face, well, more complex disclosure.
Even with the simplified CSV template, there's still a catch.
Yes, even if you use the simplified template, you still have to provide the full public-level disclosure data if an investor or regulator asks for it.
I see.
And they also want to extend the requirement to disclose significant events to cover private deals, too.
So simplification maybe for a subset, but potentially more complexity elsewhere and definitely more transparency overall. When do we expect the Commission to act on all this?
The legislative proposals amending the securitization regulation are expected sometime this quarter, Q2 2025.
Okay.
The focus will likely be on simplifying due diligence, streamlining transparency, maybe adjusting prudential rules for banks and insurers who invest.
Yeah.
We might see drafts around June.
And this all ties into the bigger picture, right? Capital Markets Union.
Precisely. CMU, the Savings and Investment Union.
Yeah.
It's all about trying to unlock funding, get capital flowing more freely in the EU.
Right. Makes sense. Okay, let's shift gears from future EU rules to something that's already here and now. DORA, the Digital Operational Resilience Act. That kicked in earlier this year.
Correct. January 17th, 2025. And it brings significant new ICT risk management duties for a whole range of financial entities. The CSSF has been pretty active rolling this out in Luxembourg.
It really forces a rethink of ICT risk, doesn't it?
Absolutely. It's a fundamental shift for many.
And the CSSF issued guidance in April, circulars.
Yes, April 9th saw some key ones. Circular 25883 amends the older outsourcing circular 22806, basically to align it with DORA.
Okay.
It removes some specific cloud clauses from 22806 because DORA handles ICT third-party risk now. But importantly, 22806 still applies for non-DORA entities or for non-ICT outsourcing by DORA entities.
So you need to know which rules apply to which type of outsourcing. And there was another one specifically on ICT third parties.
Yes, Circular 25882. That sets out specific rules for DORA-regulated entities when they use ICT third-party providers. It covers cloud computing requirements in detail, even mentioning things like needing a cloud officer.
A cloud officer. Okay. So what are the big practical takeaways from DORA for, say, entities involved in Luxembourg securitization, even if the SPV itself isn't directly in scope?
Well, you need to check carefully if an entity is in scope first. But even if not directly, service providers or related group entities might be. For those in scope, it means robust ICT risk frameworks, clear governance, incident reporting processes. It's a lot.
And third-party risk management is a huge part of it.
Huge. Thorough due diligence on ICT providers, specific contract clauses, exit strategies. It definitely adds operational complexity and cost.
And the Register of Information, the ROI, that's a key DORA requirement. What's the latest there? I heard something about the deadline.
Yes, that's a really critical update. Entities need to submit this register detailing their ICT third-party contracts. The original deadline was April 30th, but the CSSF announced an extension, which is very welcome news for many, I imagine.
Definitely. What's the new date?
The new deadline to submit the ROI through the CSSF's eDesk portal is now May 31st, 2025.
Okay, May 31st. That gives people a crucial extra month. Everyone listening, make a note. DORA ROI deadline, May 31st.
Essentially, get that right. The CSSF is focused on data quality here.
Right. Now, besides the SecReg review and DORA, any other EU rules bubbling up that might touch the securitization world, even indirectly?
Well, ESMA published final guidelines on liquidity management tools, LMTs, under AIFMD2 in mid-April.
Okay, AIFMD2, how does that connect?
It doesn't regulate securitization vehicles directly, unless they happen to be AIFs. But it impacts AIFs that invest in securitization notes, so it could influence secondary market liquidity for those notes.
Ah, an indirect effect then. When do those rules bite?
The Commission should endorse the guidelines around July-August this year, and then member states have until April 2026 to put AIFMD2 into national law.
Anything else on the EU front? MiCA, maybe.
MiCA, the crypto asset regulation, is now operational in Luxembourg via a law from February 6th. It gives the CSSF powers over crypto service providers. Impact on traditional securitization. Limited, unless you're securitizing actual crypto assets.
Okay. And you mentioned data quality earlier.
Yes, there was also a law back in January amending the RCS rules, the Trade and Companies Register reinforcing that all registered entities, including SVs, need to ensure their filed information is adequate, exact, and current. Just a general tightening up.
Good governance push. Okay, so that's the EU picture. What about developments purely within Luxembourg itself? Has the main securitization law changed again recently?
No, the core law, the 2004 one that was modernized significantly in 2022, hasn't been touched since March 2022.
And those 2022 changes were pretty positive, weren't they?
Oh, yes. They broadened financing options, clarified the CSSF authorization triggers, allowed active management in certain cases for debt instruments, not public issues, expanded security interest options, added new legal forms like SCSCSP. Quite a big overhaul.
Really brought the framework up to speed. Any major national development since then, particularly on the tax side?
Yes, actually. A big one is the new single company group tax regime. It kicked in for financial years, starting January 1st, 2024.
Single company group, what does that do?
It can allow qualifying groups potentially, including some highly leveraged SVs that aren't part of a bigger consolidated group, to fully deduct exceeding borrowing costs under the interest limitation rules.
Ah, so potentially very useful for optimizing tax on certain structures.
Absolutely. Could be a real boost for net returns and Luxembourg's appeal for those kinds of setups.
Interesting. Any other tax tweaks we should know about for 2025?
A couple of things. A small reduction in the corporate income tax rate, down from 17% to 16% for 2025.
Okay.
Also, a simplified way to calculate the minimum net wealth tax, based just on the total balance sheet. And some clarifications around the participation exemption waiver and how share redemptions or cancellations are treated for tax, all effective this year.
So Luxembourg definitely tweaking its tax system to stay competitive. What about the CSSF specifically on securitization beyond DORA? Any updates?
Well, it's maybe more what's not updated. The main CSSF FAQ on securitization actually dates back to 2013.
2013, wow.
Yeah, given all the changes we've just discussed, an updated FAQ would be really helpful for the market, I think.
You think so?
Also worth noting, the CSSF is talking more about using AI in its supervision. Could change how things are monitored down the line.
The rise of RegTech.
Indeed. And just a practical point, if you need to amend an existing authorized SV, remember the process involves sending a free-format letter to the CSSF for approval.
Good reminder. Okay, wow. We've covered a huge amount of ground EU reviews, DORA implementation, Lux tax changes, CSSF points. Let's try and distill this. What are the absolute key takeaways for our listeners right now, May 5th, 2025?
I think the big message is constant evolution. You really have to stay engaged. The immediate #1 priority for many has to be DORA compliance.
Especially that row I deadline.
Absolutely. Get that register of information submitted by May 31st. That's the critical short-term action.
And looking slightly further ahead.
Keep a very close eye on the EU Securitisation Regulation review. Understand how those potential changes, especially around the public-private definition, could impact your structures.
Right.
And on the Luxembourg side, make sure you're aware of, and where possible, leveraging those new tax efficiencies, like the single company group regime. It's really about understanding DORA, preparing for EU rule shifts, and using the available national advantages.
Solid advice. Okay, here's a final thought to leave you with. We're seeing this push for digital operational resilience with DORA, but also this drive for a deeper capital markets union. How do those two forces interact?
Interesting question.
What does that interplay mean for the future structuring, the competitiveness of Luxembourg securitizations? Something to mull over.
Definitely food for thought.
Make sure you hit that subscribe button so you don't miss our next deep dive.
We sift through the details so you get the essentials.
This has been the Luxembourg Fundcast.